Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
It's been a bumper debut for Exicom Tele-Systems. It's made a debut at a 87% premium listing as the shares of Exicom Tele-Systems open today. 65 rupees on the NSE and 264 rupees on the Bombay Stock Exchange. So 87% premium against the issue price of 142 rupees only on the NSE and 86% premium listing on the Bombay Stock Exchange. But what is it that has led to this substantial up move on Exicom on day one of listing on the stock exchanges? And also, what should be investor strategy now? Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. In this video, I'm going to detail for you what really was looking so promising to investors that the stock has made such a substantial listing gain in trade today, and also what's next for the company going forward. The first one is that the IPO was for 29 crore rupees worth, whereas the fresh issue was a 329 crore rupees out of the entire issue. And the company did see a strong demand from the IPO as well from all the categories of investors. It was oversubscribed 129.5 times, whereas the retail investor subscription had crossed 119 times as well. The non-institutional investors portion got subscribed even higher at 153 times. The qualified institutional buyers also subscribed to it by over 121 times. Now, this only has suggested that already there was a huge demand for this company. But despite that, most of the experts believe that this performance is positive, undoubtedly, because an 87% premium listing is no mean feat, but it is still lower than what was being seen in the grey market premium or was being expected. But despite this, if you look at the kind of premium listing that we have seen, is definitely on the back of the future potential that investors really hope that Exicom Tele-Systems can provide to investors. The company's established position as an EV charger market positions it for a continued growth alongside booming EV industry. So company Exicom Tele-Systems is a pure play EV charging company maker. Now we all know the way the government is positive on the electric vehicle space, the way the entire auto industry is making a lot of changes, adding capacity, making its plans of launching newer electric vehicles. This is one space that has already seen a lot of buzz. Now, there was an absence of a pure play EV related company thus far on the stock exchanges. There was no company that was so far listed on the stock markets that was a pure play EV company. Now, this company has no other segment, but its core business is an EV charging making. Now, the company will use the net proceeds from the IPO for setting up production lines at the planned manufacturing facility in Telangana, also repay some part of debt, and investment in research and development and working capital requirements for the company, and then the general corporate purposes as well. Now, what does the company really do? Let me give you that clarity as well. Exicom Tele-Systems is an India headquartered power management solutions provider operating under two business verticals. The EV chargers business, where it provides smart charging systems for residential, business and public charging users in India. So it's also catering to a large portion of the residential portion when it comes to supplying the EV charging facilities. What are the financials like of the company? On the earnings front, the company's revenues from operations, however, fell 16% in FY23 to about 707 crores, while the profits after tax have actually seen a growth of 24% to 6.5 crore rupees odd compared to the previous year. Now, the company's ROCE, however, has seen a dip of 10.9% in FY23 from 17.6% that was seen in FY22. In FY23, overseas customers contributed 8.7% of the total revenue from operations. expectations. The Indian EV industry is now being seen as the fastest growing markets in the world, with a growth of over 130% from the last fiscal year, and that is despite any lack of FAME demand incentive, albeit a lower base. Now, the EV penetration is also expected to grow across vehicle segments, be it two-wheelers, three-wheelers, passenger vehicles, buses, commercial vehicles. So all these segments are going to be requiring a huge EV infrastructure. And therefore, this company is largely, catering to all the PVs, buses and CV segments as well. Although the EVs are still in an infancy stage in the passenger vehicle segment, the penetration segment has also been seeing a rise from about 0.03% in the year 2016 to 1.3% in FY23. Now, what are experts really saying? After this substantial listing, what should investors be really doing? Even if you look at the current market price, current stock price of Exicom, it slipped from the opening levels of where it got an 86% upside. It's now come down to 70% gains. 241 is the kind of level at which Exicom is trading at. Now, why is there a dip? Obviously, those who investors who got the allotment in the IPO have been looking at booking out some of the listing gains. But the question is, what should fresh investors do? If you were somebody who had applied for Exicom IPO and did not get the IPO allotment, what should you do? And any kind of fresh investors, is 241 still a good enough time and a price for you to enter into this stock? Let's listen into what the experts are saying. Experts Mahesh M. Ojha, who is the AVP Research and Business Development from Hensex Securities, believes that Exicom falls under the fastest growing industry right now, characterized by the high entry barriers. So considering the company's vertically integrated operations that are backed by manufacturing capabilities, there is a robust supply chain that the company is positive on, there is significant research and development activities that the company is into. Also, there is a strong long-standing track record of relationships that the company has with several of its clients. Also, it has an established customer base with focused engineering capabilities. And looking at all of these positives, the expert has suggested investors to book 50% of the profits on the listing day itself, and rest of them can be actually kept for a long-term investment. What is Shivani Niyati of Swastika InvestSmart has said? Ms. Niyati has said that they have suggested investors to hold their positions with a stop loss of 235 rupees and monitor the stock performance closely. However, those who want to book the listing gains, they have actually advised that they can actually book the listing gains on day one and book out their profits at this point in time. Those are the expert voices that have come to us. Going forward from here, we will continue to track the entire EV story for you, keep telling you what are the newer opportunities that you can continue to look at in this space as well. So do stay tuned on to Business Today TV to find out all those opportunities too.
Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Tata Motors and how you view the big news that's come in, and more importantly, how much of it is already priced in is something that we'd like to know from you.
Yeah, it's a very welcome move because the fear was